Welcome to the Defense and Aerospace Report. I'm Vago Muradian here in downtown Washington, D.C., where we're at the PwC Consultancy, which every quarter puts out an assessment of merger and acquisition activity in defense and aerospace markets worldwide. And we're here to talk to Scott Thompson, who's a PwC partner, but also the lead for US Defense and Aerospace practice here at PwC. Sir, thanks very much for joining us.
Good morning.
You and your team put together quarterly, an assessment of merger and acquisition activity worldwide. And very, very interesting time. I want to talk to you about sort of what's been happening over the last 10 years, but specifically, deal volume is up. We've had some very major transactions close. For example, General Dynamics' $10 billion acquisition of CSRA. But talk to us a little bit more about the trends we're seeing year to date, trends we're seeing quarter to quarter in terms of the volume and the character of the transactions we're seeing from, across the piece, whether it's on the defense side of things or the aerospace side.
Sure, yeah. Well, we're in a period of very, very robust M&A activity for the aerospace and defense industry. Over the past several years, we've seen approximately a doubling in the average deal values that we're seeing. So, of course, this quarter we had the General Dynamics CSRA deal, which was about $10 billion. But last year we had, in aggregate, over $60 billion of deals. Half of that was the UTC Rockwell deal. And a couple years before that, we had Precision Castparts being acquired by Berkshire Hathaway. But we've had other big deals as well. The Lockheed Sikorsky deal was big, and of course Northrop Orbital ATK. Those are some of the bigger deals we've seen in the past few years.
And obviously all eyes are on whether Orbital ATK, there's widespread expectation that that's going to go through. Internationally, we also saw Elbit acquire Israel Military Industries, so that was a little bit of overseas consolidation, and also in the shipbuilding sector as well. That's
right. Well, in the shipbuilding sector, what we saw was a number of Chinese deals, and we've seen that over the past few years where China has really made an effort to consolidate its aerospace and defense industry. As a matter of fact, if we look at some of the investments that China has made, another report that we do looks at the total number of suppliers and aggregate value, and China has really increased significantly their total aerospace and defense industry over the past several years.
Especially, and given that they have such a sprawling industrial complex of both state-owned but also some private companies, you could see clearly some shakeout there. Let's talk a little bit about the U.S. market, obviously a key driver in some of this activity. On the defense side of things, how did the Budget Control Act, sequestration, I know you're talking to a lot of folks in the C-suites. Talk to us a little bit about how that logic has played into some of the activity we're seeing, and also the concern that actually funding may be limited, that there will only be a couple of big years of money before things start to constrain again. Talk to us about how both of these dynamics and other market dynamics as you see them are shaping decision-making in terms of the kind of M&A that we're seeing.
Sure. Well, specifically to the Budget Control Act, sequestration, when that was passed, we saw a couple things happen. First of all, generally speaking, the overall M&A market was suppressed, and that was because there was tremendous uncertainty about the total amount of the budget, where it was going to be spent, and so it makes it hard to value companies if you have that much uncertainty about what their future cash flows are. At the same time, though, however, we saw a lot of activity in the government services space. So we saw some companies going more sole focus around government services, and at the same time we saw consolidation. And I think that was because the services space got hit the hardest under sequestration. So what happened now in the past couple years, you've had a lot more certainty, about a 20% growth in defense budget since the Trump administration took over, and more confidence that that will continue. Now, I know you asked, is there going to be, a big one-time run up and then things are going to slow down? Well, I think that's not such terrible thing, because the run up has been pretty big. So even if it sort of flattens out, slow growth, I think it's still a very positive story.
In terms of volume, you said we were looked at very, very large volume over the last couple of years. Now, year to date, we're looking at about $15 billion, which is sort of the marquee number. Lesser in some volume. I think it's 86 deals so far. A little bit down, but the aggregate value of each is about $480 million or so, $485 million, if I recall your great things. So go on their website and download the PDF, and you'll get the full report and check it out quarterly, right? Because you guys are constantly updating these numbers. How do you think the year is going to end up? I mean, if you're doing some crystal balling and some projecting, do you expect to see some significant big activity between now and the end of the year?
Well, I do. I think we're going to see a continuation of this robust environment. I mean, 2 of the last 3 years have been record years by a lot. And, so far this year, we're on a run rate that is roughly equal to a record year. So I'm not necessarily predicting a record year because it's hard to, predict these really large values. But I would say that I think the robust environment is going to continue. Now, there's a couple reasons for that. Overall on the commercial aerospace side, I mean, things are really booming. Last year, revenue passenger miles globally grew above 7%. They grew above 6% the 2 years before that, and above 5% every year since the Great Recession. So, when you think about it, that's approximately double global GDP growth. So that's a very attractive place to be on the commercial side. And on the defense side, we talked about it. U.S. largest defense budget, up about 20%. Trump administration is emphasizing, defense exports, is lowering some of the barriers in some cases. So you have that, plus you have tax reform, which is creating, extra liquidity for companies. The other thing I think we've seen is that we went through a period of time where there was a lot of emphasis on return of capital to shareholders, especially among defense companies. And that was partly, I think, a response to a lack of good investment opportunities because of that uncertainty that I talked about. So now that you have a changing of those, economic characteristics, I think we've seen a big shift away from just return of capital to shareholders and much more invest for growth.
And your analysis looks at globally, region by region, but also market sector by market sector. Talk to us about what some of the trends that you're seeing in each of the market sectors, but also regionally, that goes beyond, for example, what we've seen in China, for example, as you earlier mentioned. But talk to us a little bit about some of those trend lines you're seeing regionally, but as well as by market segment.
Well, certainly on the defense side, we've seen a lot of activity in the Middle East, in Asia. But one of the interesting trends, I think, is a resurgence in Europe. Some growth in defense budgets coming out of Europe, and some urgency around expanding defense budgets, particularly in Eastern Europe. I think that's partly in response to, more aggressive Russia. The other interesting trend I think we're seeing is, the U.S. has always been a top receiver of direct foreign investment in the aerospace and defense industry. And I think especially because of the robust economy and tax reform, I'm seeing a lot more foreign companies think hard about expanding operations in the U.S. as well.
Do you, is there any, as you talk to folks, is some of the America First rhetoric is seen two ways? There are some folks overseas who see this as, look, the president is just giving red meat to his base. If you listen to what Secretary Mattis, Secretary Tillerson, ex-Secretary Tillerson, but also what Mike Pompeo, the incoming Secretary of State, assuming he gets Senate confirmation, have been talking very much about the importance of allies. It's codified in the national security strategy, the national defense strategy. Is any of the America First rhetoric, tariff concerns, and other things changing how people think potentially about accessing or coming into the U.S. market?
Well, I would say it this way, and I'm going to be cautious about because I'm not a political commentator, so I'm going to try to stay a little bit clear of that. But I would say this, that during the early days of the new administration, I think there was a lot of uncertainty about how all that would play out. If you remember, there was a lot of discussion about trade tariffs and so forth. So, and that was kind of across the board. I think a lot of that concern has been eased to some extent, and it seems to be more focused on certain products or certain countries. So I think between having some actually backing off of some of that trade barrier talk, as well as having certainty around tax reform, I think overall it's a positive story. There's certainly some uncertainty in terms of what's going to happen on trade, and people are watching that closely.
But largely, what a lot of overseas contractors have told me is, hey, look, we're in the United States, we're operating in the United States, we're employing Americans, and that's the key. Is that how a lot of the companies that you're talking to are looking at the situation? That, hey, as long as we're here and we're good corporate citizens in the American ecosystem, this is a good play for us.
Yeah, I think so. And as I said, I think a lot of foreign companies that I talk to, now that we have certainty around tax reform, are taking a hard look at how attractive the U.S. market is, and looking at potentially expanding operations here. I think one of the other uncertainties people are thinking about is, what is the competitive response going to be from other countries? Because this advantage that's being created on taxes could shrink if other countries have similar tax reforms.
And let's, you mentioned on the commercial aerospace side of the equation, none of the airplane companies can build airplanes fast enough to satisfy the demand globally. China's obviously, insatiable on that. Boeing is building airplanes as fast as it can. Airbus is building airplanes as fast as they can. Embraer is building airplanes as fast as they can. Talk to us a little bit about what the kind of activity on the commercial side of things we're seeing. Obviously, the PCP, Precision Cast Parts deal, was a gigantic deal. That's a key company in the entire aerospace order. Talk to us about some of the other deals that we're seeing. Folks, I think, have a sense of fully understanding on the defense side of the equation what's happening. Talk to us about with a little more granularity on the commercial market.
Well, I think the biggest deal on the commercial side is the UTC, Rockwell deal. A lot of people would say, that's a response to more margin pressure on the supply chain, and so I think that is going to be, a continued catalyst to gain more scale on the commercial side to, protect those margins to the extent that they can.
And one last question. Anytime there's a lot of big deals start to happen, there's always concern about on the regulatory side of things, how are things going to play out? Everybody thought, hey, let's do Lockheed and Northrop because that'll get through, and that was the deal that didn't. Although there were some folks who said, hey, had they done it a little bit earlier, they might have been able to get away with it. Is there any sense at all, there are a lot of highly skilled folks who are involved now in the process. Eric Tuning is manufacturing industrial-based policy, formerly of McKinsey, a former Army officer, so he understands everything from the operational to the industrial scale. Yeah. Jerry McGinn, longtime hand, working for him as the deputy in that office. Ellen Lord is the AT&L. There were almost everybody in this has business experience, whether the service secretaries or at AT&L. Pat Shanahan is a Boeing guy who's now the Deputy Defense Secretary. But despite that, is there any sense that there might be shifting regulatory sands here at all that folks should be considering in the back of their mind as they get into some of these deals?
Well, again, I want to be careful about political prognosticating because that's always treacherous territory. But I think we're down to a handful of large primes, and personally, I haven't seen or heard of any relaxing of that point of view. But again, I think there is certainly opportunity for the large primes to acquire mid and small tier companies. I think the Northrop Orbital ATK situation is a prime example of that.
And so a lot more portfolio shaping as long as Boeing and Raytheon decide not to merge.
Exactly, right.
Scott Thompson, partner here at PwC, also the lead for the consultancy's US Aerospace and Defense practice. Sir, thanks very much. It was a pleasure.
All right, thanks.